Hi guys, good evening from Europe, good morning, good afternoon, wherever you are. Piotr here, this Light Forex Global YouTube channel, and this is going to be another educational video. So lately, the last three videos, it was in relation to the powerful candle and how to trade the powerful candle in the direction of that candle, as well as how to trade that candle when we are going to see the break, right? And we also made the video when it comes to the examples or real-time examples. Now today is gonna be something similar when it comes to the break, but it's going to be in relation to the Doji candle, especially double Doji. Well, there is very common strategy to try to trade in the direction of the first break of the double Doji consolidation. But me personally, again, I do prefer a little bit different approach. So, without a further delay, let's have a look what we are talking about. Okay, so today we are going to use the whiteboard, right? And eventually next time we are going to go through some examples. So let's have a look what we are talking about here, right? It's gonna be quite important that from the conservative perspective, it would be good to, for example, all right, figure it out what kind of the direction we have from the higher time frame, right? If we are going to walk 1 hour, we would like to know where we are from the daily chart, for example, right? If we are going to watch 15-minute chart, we would like to know the direction from the 1 hour chart, etc., etc., etc. So let's start with the overall direction to the downside, right? In that case, at some point, market may start to consolidate, right? And within that consolidation, right, would be good to see some kind of the double Doji formation. All right, that's the point number one. Double Doji during the consolidation after a move to the downside. Then what we would like to see, attempt to break higher through that double Doji, right? Okay, that's point number two. Then what we would like to see 3 to 5 candles staying above, right, but without the significant continuation to the upside, all right? And then we would like to see move back down below the breakout point. That's another point, right? In that case, we are going to make the low, we are going to point the low, lowest low, whatever the low is. When it comes to this double Doji, we want to point the lower low, right? And if we are going to lose the upside momentum, 3 to 5 candles, right? 3 to 5, no more, 3 to 5 candles, right? And if we are going to get back into that double Doji, right, I'm going to place sell stop at the lowest low of this double Doji, right? My stop is going to be at the higher high of this double Doji, right? And my first target is going to be 221, and let the rest to continue to the downside, right? Especially if you can make the analysis based on the higher time frame, that's where you're going to get your second target. Okay, hopefully that's clear. So let's turn the situation here. Let's agree that overall move is to the upside. Overall move is to the upside. Okay, so now we have upside move. What we are looking for? We are looking for some kind of the consolidation after the upside move, right? And then we are looking for some kind of the double doji when it comes to that consolidation, right? So some kind of the uncertainty. Right? Cool. Now, next point is that we want to see attempt to break the downside, right? Opposite to overall direction. Then, what next? Within the next 3-5 candles, we want to see market is losing the momentum. Market is going get back into inside of that consolidation, okay? Or something like that. Then I'm going to place stop buy order above the highest point of that double doji consolidation. All right, and my stop is going to be 1 pip below the low of the double doji consolidation. My first target is going to be 2R, all right, and then moving my stop to break even or +1, I'm going to let the rest to the run. Of course, it's gonna depend where we are from the higher time frame, how high in that case of the higher prices we can go. So overall, it's very easy, right? Strategy. The most common approach is to try to trade with the first break. I did it a little bit different. I've made more than 100 tests. For me, of course, each of us is different trader, right? So you have to do your homework, you have to do your own research, you have to do your own test to check if it's going to work for you the way it's working for me, right? That might be very nice additional tool into your trading arsenal, especially that we know in advance the entry, the stops. We have a time to try to go through the technical analysis to check if the risk-reward ratio is in our favor. And the last thing here, the most important, is that we are trading in the direction of the overall trend. So specifically, we have to find this type of the setup when the market from the higher time frame perspective is going in one direction. Lower time frame, we want to see attempt to the break against the overall direction through the double doji. We want to see the move is stalling, right, within the 3-5 candles of that lower time frame, and we want to see the break opposite to the higher time frame is losing momentum, we are going back and we are trading in the direction of the trend from the higher time frame. Guys, it was my pleasure again, as usual, to make that video for you, right? We are going to go through some examples when it comes to the charts in the near future. So stay tuned, subscribe to the channel, and see you around, guys. Thank you very much, take care, and goodbye.